We've had three speakers talk about some really amazing, complex and technology, but it seems to me that with all of them, one of the most basic human instincts of trust is still at the core of making them work. Nathan talked about it explicitly in terms of that trust relationship of transferring money. With CBH you've got the whole trust thing about working in a cooperative, which is a whole other matter, but also feeding massive data streams straight to a bank manager, that is going to take an awful amount of trust to make that work. I guess my question is, will these technology platforms that you're all talking about become so embedded in what we do that it won't matter about trust, that we'll be forced to use them, or will trust still be the critical factor in making all these things work?
That's working?
Yeah.
I think it will, always. Ultimately, our goal, the exchange, it wants to be a marketplace, and an active and liquid marketplace. So to some extent, people are like, well, that's the market, if we're successful, that is. But we need to get, the trust is always going to be there, otherwise guys aren't going to engage. And that's where the other point that sort of alludes to is, and it's been touched on as well, is the duplication of cost. Digital technology, we end up having a boom of potentially grower portals and those sorts of things, and and that's where our business model was almost going down that line for a period, and now we're saying, actually, hang on, there's a lot of cost in tech, and we think we can have a proposition that works with businesses, and together we actually have a stronger value proposition that gets that trust, because we're good at exchanges, they're good at the human side of it.
Look, build on that. I think the word in that is market, and there's all the things, there's all the technologies, and it's been raised so many times today that the late adopters and the early adopters, and you don't trust it, but inevitably it won't be perfect. The internet is not perfect. We've talked about ADSL going down, or Telstra going down, and there will be hackings at times as well. But these things won't go forward unless you get the broad market cooperation, the role of the regulator as foolproof as possible, and then they will become something that we take for granted.
Look, from my point of view, as we move forward, trust has always been there. We've always needed to have some sort of trust model in place. It's just the way we look at the trust model going forward will be more digitised, particularly as the people that have grown up with the iPads and the iPhones and the digital world and the sharing economy and all that sort of other stuff. I mean, Uber runs on trust, eBay runs on trust. The blockchain creates a different way to view trust, and it's just going to be part of our lives going forward. But I'll have to be there. It's the acceptance of us in the new trust model.
Questions from the floor?
Peter Thompson, Michael, to you. Using the digital form of valuation, I suppose, is the bank considering valuing land, using the real-time, you're looking at valuing cattle, but actually valuing land real-time and historically?
Absolutely. And what we're talking about today obviously are technologies, whether they are 5 or 10 years down the track. So would I say ANZ is definitely looking at valuing land? I can't say that, but I can say it would be stupid not to be looking at, once you are putting the sensors in the land, knowing everything about the water table, history and forecast, for example, the soil type, everything that we have talked about today. And actually this was a point that has come up in our discussions recently. So many of the prominent land transactions we see at the moment are based on somebody's word. This will fundamentally change the structure of land transactions in Australia when it happens, that things will be able to be evaluated on a much more level playing field to a more level set of metrics. And that will take shape as well. So the answer is yes. The bank will value land on that, and that will be factored into everything that you need that value for, but so will everybody else in the market. It will be intriguing, and I know a number of you in here will be well and truly working on that already if you're in the land turnover game, in terms of how you plan to market it and what those key metrics will be.
Michael, ANZ's actively involved in the swap market. To what extent do you see that expanding and forming the basis of provision of working capital?
It's an interesting one. I can't sort of comment on how much the data is flowing there because that's not a part that I've been working on recently. To an extent, you would say that the utilisation of data right across the board. In terms of policy, in terms of the utilisation, in terms of which products as well, that's a policy that's taking shape as quickly as possible. I know that's a very broad answer because it's still so much in development. And I can't be more specific than that.
Another topic and another theme that's come through this morning is the value of teams in multidisciplinary teams, realising that in pulling a lot of these products together, we're talking about a lot of different disciplines, and particularly at farm level, they're disciplines that are not necessarily going to be present. From the context of much bigger organisations, can you talk a little bit about how you've pulled your teams together and whether there are any lessons or advice about smaller organisations, farm level sort of approaches to pulling the combined expertise together and what you need to do?
Yep, I'll start with that one. So from our point of view, I think understanding what you're good at internally and what part of the world you're playing in is very important, and also then knowing when you have to go outside to get that expertise. So for us to do that supply chain model, we didn't have the expertise to crunch that data or pull it together. We ended up finding a Turkish company, as it was, to help us pull that one together, and they came straight out of MIT, those guys. So knowing what you're good at and what you're not good at is very important, and then you can structure partnerships with internal, external type of people. The real innovation comes in how you can apply that smart stuff to your business today. So how could we apply an Uber model to the grains industry? How could we apply an Airbnb model to the grains industry? How could we apply blockchain to our industry? That's the bit that you really want to make sure is internal. You've got those smart people doing that. You go outside for the bits that aren't part of your business.
Yeah, I'll just briefly touch on how we operate. We have a business development team, an analytics team, and basically a tech team. So we're a small business, 20 people in the office. And the culture is really, it's got to be customer driven, so with tech. And then it's about intent. So we've got people that are good with customers, people that are really good at crunching data and numbers and interpreting those numbers, and people that are really good at implementing the change. So that's it internally, and I'll just reiterate the comments around understand what you're good at and look external for us. And that might be, you might have a vision where your product needs to be, but recognising that somebody else has got that, and maybe we don't need to recreate the wheel. Yeah, we need to work out the commercials, we're all commercial, but we need to have those conversations. So having that really open approach with external stakeholders as well.
Can I just one more point to that, and similar to both of these guys, we bring people from outside who are unfortunately so much younger and cleverer than we'll ever be on so many things, bring them from all over the world, some subcontract things. But the other thing that is important to us in this process, and I think is going to be so important in this whole debate, go back to the word exponential. And the rate that these technologies are bringing exponential change. In a monolith like a bank with 44,000 odd employees, you could stick to the bureaucracy of having to go through the same time frame of approving all these products and researching everything. It's not going to work. You'll get so far left behind. So one of the things that we are really finding, and I think the whole, whether it's the agri sector, banking, whoever, you cannot work at the same pace that you're used to, particularly for the larger organisations, in adopting the technology, approving the technology, going through the same processes. It will leave you so far behind. So it's very much changing that culture about how quickly you work.
Jonathan?
Yeah, hi guys. Jonathan Dyer, grain grower from Western Victoria. We're at used to rain. Question firstly to Nathan, but probably relevant to all the panel. So dabbled a little bit with the Clear Grain Exchange and a couple of small transactions, but nothing sort of too major. We've got a lot of on-farm storage. I collect heaps of data about what we do on our farm. There's plenty more I could collect if there was an end use for it. Will end users, will grain buyers believe the quality data that I collect about grain to be able to use something like the exchange to sell off farm? And I guess similar to the banking thing, do you believe my numbers? Or are you always going to want verification? I guess coming back to that trust thing, like, because I could do heaps, but yeah, is it worth doing? How can I capture more of that supply chain value myself?
Yeah, great. So in any marketplace, there needs to be a registrar function, which in effect, the blockchain is sort of, that technology is sort of coming in for that function. Now, the way our platforms work, so the registrar function is understanding that you own this and it's recorded somewhere, so that then you're able to trade it. So the way that we've developed the marketplace is, in effect, GrainCorp, they weigh the grain, they certify the grain that it's APW or whatever it be, and they say that Joe Bloggs Farmer owns that grain, and it goes in. Then we're able to trade that ticket. So that's the critical part that we need to access the on-farm grain. Now, glad you asked that question, because we have developed where we will be able to do that at other delivered sites, so end user sites, for instance. So if you're storing it on farm and then selling it direct to an end user, because at the end user site, it goes over a weighbridge, it gets quantified, it gets qualified, those sorts of things. So that contract works there. Will we get it to the on-farm? Basically, we'd need to know what's there. You know, if we want to actually do the transaction piece at the on-farm, we need to know what's there. But in effect, we can access that via, because ultimately you deliver it somewhere and sell it. So if you're happy with selling it at that pricing point, we can do that.
So CBH, we act as a registrar in a lot of places too, but we've given this quite a lot of thought and how we could trust our growers more. It will come down to a trust model, an automated trust model of some sort. And I think it'll be on two things. It'll be one on your storage, how trusted is the storage that you've got, and the other one will be you yourself, how trustworthy. If you tell us it's APW2, 10.5 clean grain, you know, it'll be a risk-based price you'll get at first, I think, and then over time, once it gets registered at some point and clarified, automatically you will end up with a risk rating or a trust rating, I think. I think that will come eventually. It's just a matter of time, but it will be priced by risk and by you and by your storage, I think.
Oh, and the other thing, look, I'd say from a banking perspective, fantastic, congratulations for being as innovative as you are in that. The answer is I don't know, because I haven't seen your data, but absolutely have the conversation, because if it's not what the bank is looking for, then pretty quickly you and the bank will work together to slightly streamline it to make sure it is. So, and look, and I said as far as having the conversation for anybody out there, whether it's the particular data you have or the technology you're starting to use and you're wondering A, whether it's applicable, or B, whether it's able to be integrated, have the conversation, because with these things, as I said in the last answer, changing so quickly, we're building policy and we want to hear so we can try and build it in.
Yeah, Richard Dickman, Bayer. Question for Matt and perhaps Michael. With your tremendous knowledge of supply chains and where the grains are coming from and the data associated with that, have you actively used that in the marketing of grains into export markets, and does it drive value and so on? And
yep.
Just Michael, just to finish up, we mentioned blockchain and other authentication technologies. Are they also being used, and are we ahead at all of other markets?
All right, I'll go first. Have we actively used it in marketing our grain? Probably not. Probably mostly it's around the cost minimisation and the efficiency of grain to port. It's probably, for the marketplace, it's about having surety that they can meet the market with the volume of grain they need when they need it. So if there's a price spike and more people want to ship grain, have we got the capacity in the supply chain to switch it on and deliver at that point in time, or do the marketplace miss out? That's probably to the extent we've used it so far. there's a whole other world of that predictive demand and how do we smooth that through and then ultimately connect it to the growers and what they're growing year out and that sort of stuff. We haven't got into that space yet, but that will come very quickly because there's a need for it. But so for us at the moment, it's been about efficiency to port. Can we switch on more capacity quickly so that the marketplace can meet demand when price spikes?
The answer to the second part of your question, Richard, no, not necessarily. We aren't ahead of the competition. And when you sort of work on a global scale and you've got a reasonable idea around the traps of what other markets and particularly our competitors are doing in terms of utilising blockchain to make their own supply chains more efficient, and particularly their customs more efficient as well and their trade more efficient, unless there is, there's certainly the need for Australia to make sure we don't move behind what some of the competitors are doing because it's really going to be an edge for them. There's some fantastic stuff going on a global basis and I'm not convinced that it's at the same rate here.
Okay, we've got time for 2 more questions. We'll have Mark and then I think we've got one over here on the right.
This question's mainly for Michael, but everyone else feel free to have a crack. There's a degree of redundancy in an inefficient system. And when we're talking about equity in our businesses, that can be a very handy cushion. You're talking about an incredibly efficient system that could be done real time. How does that then translate when we start talking about things that aren't necessarily foreseeable, like a ban in live export or an East Coast low at harvest or a northwest moisture feed for a similar scenario, or the inability to get a crop in the ground? What happens to my equity if I've decided to indulge in your largesse?
It's a very good question, and it's a great question because there's a few answers to it. You could start with that's yet to be worked out, and that's the main answer. The other reason why it's a very good question is when we've had some of these very clever young, we've had some French teams in the other day building some of these amazing algorithms on production and price forecasts going out, and we put that to them. How do you build in production shocks on some of your volatility forecasts as well, in whatever it may be as well? And it's still something that they're coming to terms with, and I don't know any model that's perfected it as well. So that is yet to be worked out. And the third part of it would be, and banks do this, they will always take a step back from policy as well when those shocks happen and look at them on a case-by-case basis. So in a real-time basis, how's it being tackled? It's being worked on at the moment. And we had the guys up on the 32nd floor the other day working on it. What will be the outcome? Don't know, but it's in the middle of the mix.
Last question over here.
Yeah, Rob Bramley, CSIRO. It seems to me that most of the discussion this afternoon has in some way been a discussion about averages. And of course every average has associated with it a variance. And one of the things that you can do with digital technologies is get some information about that variance. And I'd be very confident that if you got a room full of maltsters in front of a couple of silos of barley at 11% protein, but in one silo the variation was plus or minus 1%, and in the other it was plus or minus 5%, the maltsters would be a damn sight keener on the one that was plus or minus 1%. And you could say exactly the same about a load of winemakers interested in processing grapes that are much less variable than an alternative. I'm surprised that nobody's talked about the issue of variance and how the digital technology can be used in order to refine some of the quality optimization and product streaming and a whole host of other opportunities that potentially present by thinking about how variable things are rather than just by talking about the average.
Yep, so from CBH's point of view and the quality optimisation, so while that's created a weighted average, all that's done is give the growers the true reflection of what they've produced. Behind the scenes, we keep the crop very specific. And in fact, we want to get better in that space so that we give the maltsters exactly what they want. But we don't want to give them more than what they've asked for or paid for either. So in the past, and I'm sure there's growers here, you might have given away 0.3% of protein because that's what was in the truck. Yet the maltsters ended up with that, and it might show up in price and all that sort of other stuff, but really, if we can give the grower full value for what they've produced and we can make that smooth, fantastic. If we can give the customer exactly what they want and what they've paid for, that's probably the next big challenge. But we still keep the crop very separate behind the scenes. We don't average it like we did in the digital system there. It's almost 3 layers now. So we've got to make sure that we can produce and give exactly what the customer's paying for it ultimately. So if we can make sure they're getting the full value for what they want, but ultimately the grower's also producing it, and they've been giving away a fair bit lately too.
It's a it's a really good question, because it opens up, you know, what does the industry look like going forward, and ultimately that, you know, to your point, well, it's going to be determined by the customer. So, you know, does the customer value, to bring my dad into it again, does he value Tim Cattle's H2 wheat differently than what he values someone in the Geraldton Port Zone's H2 wheat? For whatever reason, because it's a drier climate or soft finish, whatever.
Much better, that's right.
So that is the opportunity with, you know, so our platform, as an example, you know, I sort of touched on it. At one point we were trading, the trade was happening at a port zone level, typically. Now it's gone bang to upcountry sites. So now the number of marketplaces in effect are 500 plus in terms of locations. Now, do we end up having it to the silo level? I'm not sure. You know, then you've got other around liquidity. But if the buyer's after it or the customer's after it, there's no reason the technology can't help facilitate.
All right, thank you. Look, I'd just like you all to show your appreciation for our 3 speakers once again.